So it's time to declare your crypto. What do you have in your digital wallet? Well, they want to know. The central banks now want to know. HMRC are asking questions. They're starting to partner up with really well-known brands, Coinbase, eToro, because now they need to know what you have in your wallet. Firstly, welcome back everyone to my channel. I'm Aaron Knightley, and if you haven't guessed already by the title, I'm going to be talking about crypto taxes and what might be on the horizon and what I believe you should be keeping an eye out as a domestic investor. I don't suppose many businesses are going to be watching this video. This is very much for the individual investor that's holding some currency in their digital wallet across different coins, and there are changes around the corner. And look, this was only a matter of time before these changes were going to start happening. Taxes will need to be paid, but the question is, how can we in the right way legitimately avoid taxes? Well, in this video I'm going to go through that, so stick around to the end, and we're going to go through some really key points. So I'm going to start off by just saying it's safe to say that the crypto market has been an absolute roller coaster from start to finish. It's up, it's down, and in the great words of Isaac Newton, what goes up must come down. With every rise there is a fall, with every high there is a low. That is a fact. Okay, so crashes and peaks and everything like that, it all happens, it's inevitable, and that's what we've seen most certainly with Bitcoin recently. So how does this affect, and what implications are coming in when it comes to taxes? Well, HMRC are working now alongside, let's just say, Coinbase, for example, where if you hold over 5,000 euros of digital currency, you are now going to need to declare that, and therefore, is it earned income or is it capital gains tax? And also now eToro is in conversations, and there has been a connection made between HMRC and eToro in regards to showing what you have in your digital wallet. So this is something we really need to pay close attention to as investors, and what changes are on the way. So Bitcoin, let's summarize Bitcoin. Okay, so why was it, I'm sure many of you watching this video, look, I'm no expert, but I'm sure many of you already know, but I'll give another overview. But Bitcoin was that Robin Hood story of creating a decentralized digital currency where the power goes back to the people. Okay, so we take control, we're not monitored by the central banks, we can do what we want, we can earn what we want, and we have full control over that money without having that forever watchful eye of the central bank. That's essentially what it is. Was that story ever going to last? Did it work for Robin Hood? No, it didn't. Is it going to work for us in real life? I always believed that it wouldn't long term, and I don't think it will. I think it will play a part, but I don't think over long term the central banks will allow this to continue. You know, Rishi Sunak is sitting there squirming, thinking millions of people have made money from Bitcoin. This can't be allowed. How can we squash this and take back control? And that's what's starting to happen now by taxes coming in and implications, and there's going to be hoops that we're all going to have to jump. So let's go actually through how could we avoid legitimately paying taxes. Well, obviously, I'm going to read it through here. By the way, all of this information is openly available on the internet, Gov.uk and many other sources. But if you stay within your personal tax allowance, so £12,300 per financial year, if you stay within that, you're not going to be owing any tax. So many domestic investors on the lower scale, if you're not really heavy into Bitcoin, that's going to be your best bet to stay within that allowance each and every year. Whether you offset, buy, sell, come into that capital gains, as long as you stay within that £12,300 bracket, you're going to be okay. Now, what you can do is if you're married, you're going to have the bonus of basically spreading both allowances over both people. So you will have a maximum allowance if you are heavier investors of 24,600. Okay, so you could divvy that up between the two, come within each of your brackets of the 12,300 and not pay any tax. But of course, that's if you're a little bit heavier into Bitcoin, if you do have that amount. It's also really key that you remember what your personal circumstances is when it comes to your income. So are you a lower taxpayer and you come within the 20% income tax bracket, or are you a higher tax payer in the 40%? Because this is going to make a difference in regards to when you owe capital gains tax. If you're a lower taxpayer, then you're only going to have to pay 10% capital gains tax. If you're higher, then that comes under 20%. So those are big factors that you need to take in consideration, because if you're selling up or you're offsetting some of these profits that you've made from any kind of crypto, that's going to have a heavy impact depending on whether you fall under the 20% or the 40% higher taxpayer bracket as you personally in your own circumstances. Now, moving on to gifting, there are ways to mitigate your tax through gifting. I will say that there is a very fine line between this. It's a very grey area, certainly in the UK, so go seek special advice, certainly someone who deals in crypto as a financial advisor, and go get that advice that is needed in regards to gifting. But in some countries, there is no tax liable for gifting, but that's many other countries. I don't believe that's the UK. So alternatively, this is another option again. This is all widely available, but this one is a bit backwards if you ask me, but it's offsetting your taxes in the current financial year for your capital gains and any profits made, or even income tax, is this if you offset any losses you've had within the last 4 years. So up to the last 4 years, if you had losses within your business or personally as a freelancer, etc., sole trader, then what you can do is you can carry over those losses into your current investments for your capital gains to mitigate it. It's a bit backwards, because if you think, well, if you lost a year, 2, 3, 4 years ago, and now you're having to use that in order not to pay capital gains, in my eyes, you're only kind of breaking even. So it doesn't really make too much sense, but is it a legitimate way to mitigate tax in the current financial year? Yes, it is. So that's one way of doing it. Finally, something to remember, if you are someone who uses crypto as a payment service, so for example, you are taking an income or you're being paid crypto for the service or product, you need to bear in mind that you're going to be liable for income tax on that crypto that you're receiving, and potentially capital gains as well. So that is something you're going to need to bear in mind. Now, all of this are things that people never predicted. They thought decentralized, giving back to the people, we're good to go. This is only going to become stronger, more powerful. But what I want to stress, and as we sort of come to a close here, and look, leave me a comment below if I'm no expert, and if you have different opinions, anything to do with the tax implications, other ways of mitigating tax, or any kind of feedback or comments, leave me a comment below. I'll get back to you. And if you do like my content, just a quick note, leave a comment saying subscribes, leave me a comment and I'll get back to you. It'd be good to know any new subscribers, and then build a bit of rapport from there to what you think of my videos. But finally, what I want to sort of stress when it comes to crypto and going forward, and especially with the taxes that might affect you and I as domestic investors, is that how far does this go? Because my view and my belief is that when something like this, Bitcoin, decentralized, threatening to a certain extent the central banks, at some point the central banks will go, and especially Rishi's probably sitting there absolutely squirming, thinking we need to put an end to this. And that's why, they're slowly drip feeding this HMRC, partnering up with where the platforms where we buy our crypto, Coinbase, eToro, there's a few more, BlockFi I think it is, where they're going to partner up and they're going to get exposure, just like they do with our bank accounts. They're going to have full exposure of who has what. So the whole anonymous transaction, I believe, will come to an end. So here are my recommendations, no advice, recommendations. If you are thinking of buying in a dip and you're buying in bulk, just stop and pause and think about this. When you buy, you will then have your capital gains tax on the purchase of that. So if you bought really low and it does skyrocket and you plan to do something with that, you're going to have a really big margin of capital gains tax to pay. So my recommendation is, any time before you invest and buy, is that you stop, pause, and think, okay, is this knee-jerk reaction because I've seen the market drop or I've seen it spike, I want to sell, I want to buy, will it have a tax implication if things come into play? That's what, it's all ifs, buts and maybes, but you still need to make a decision based on if, buts and maybes. Because every time I make a decision, I think, okay, if I do this and this were to happen, how would it affect the decision that I've just made now? Rather than thinking, okay, there's been a huge dip, I'm buying now, I'm going all in, all chips on the table, I'm going all in. That's not a wise decision, because then you might have really big implications. And look, people have done very well on Bitcoin, meme stocks and other avenues, But eventually, if it makes enough noise, which this is Bitcoin and meme stocks and alike, the central banks will go, enough is enough. We now need to start putting our foot down and we need to start bringing in stuff. And that is by way of taxes. And this is where it will cripple people. So just be aware, these were the main ways of really kind of how you can go about reducing the tax that you pay. Look, I'm not against paying tax because look, you know, we get a good NHS, we get good services, you know, we have a lot of benefits from paying taxes. But at the same time, of course, we want to reduce. We don't want to make the richer richer and the poorer poorer. We want to get a good balance of spreading the wealth and trying to achieve as much wealth for as individuals as much as we can. So that's kind of what I'm promoting here, is that just be very savvy about what you're doing and the decisions, and have the long term when it comes to crypto. You know, don't see it as a short term thing, because I personally believe if it makes enough of a threat and it does get to a certain scale, the central banks, who essentially run everything, by the way, if they are threatened, they will just squash it, crush it, roll it up into a ball and throw it out, and it will not exist. Whereas if it's done in a correct way, taxes are paid, then it will probably be allowed to live on, and we'll use it as a service, which is the way that I look at it. And you'll probably get quite a good return from the crypto market over the long term, and it will be allowed to continue. Those are my views. If you have different views, leave me a comment below. Look, if you like my videos, please hit like, hit subscribe. Again, any feedback, do let me know. And until the next video, hopefully this has shared some insight. I'll speak to all of you very soon.